So some of you want to start investing in the stock market, specifically start in the S&P 500 because you've seen how the market bull run has started and your fingers are now itchy to start. So in this video, I'll go through some of these platforms and the methods that you can use for the most cost competitive way to invest in the S&P 500. And to put it specifically, there is a difference in how you want to invest depending on which type of funding you want. And based on the title, we have cash, we have CPF OA, and we also have SRS funds. However, the disclaimer here is that none of this is financial advice, so do what is best for your personal situation. If you want to start out investing, but you do not know how to start investing, then maybe choosing an index fund like tracking the S&P 500 is a good way for you to invest in the largest public US companies. And since your investment is spread across 500 over companies, the risk is significantly lesser than concentrating on just one company alone. In fact, if we look at last year, 2023, the S&P 500 rose by more than 20% per annum, which is one of the record returns. And if you're a beginner starting to learn about investing, then you may have some questions. So just ask them in my Honey Money SG Telegram group with over 13,000 members to start your investing journey out there. Let's take a look at the first way to invest in the S&P 500 index, and that is using cash as funding. If you just want to use cash and invest, then the most straightforward way is to buy the VUAA ETF listed in the US. Now, I say that it is the most simple and most convenient method because most of the online brokerages offer it. And you see, we have so many online brokerages in Singapore, not just the traditional brokers. So as long as they have access to US markets, VUAA will definitely be available for you to start investing. And VUAA expense ratio is really cheap at 0.03% per annum. For those of you who are interested to do option strategy, then maybe you can consider SPYL because there is more liquidity and it's more efficient for options trading. Then if you want a more automated solution to invest regularly, you can look at regular savings plan, which is offered by some of these online discount brokerages as well. And I'll show you an example of how to do it. I know that investments may sound really complicated and it is quite scary to start off with really large amounts. So if you want to start with smaller amounts, then you can consider to use Moomoo Regular Savings Plan or RSP to dollar cost average into your favorite US stocks or ETF. To set up RSP, select your stock or ETF on Moomoo app, click the three dots on the right and then RSP. Start with minimum $10 and select contribution frequency from weekly, every 2 weeks, monthly or daily. For new to Moomoo users, you can get up to 340 Singapore dollars on Moomoo Cash Plus with 6.8% per annum guaranteed return on the first $60,000 subscribe. Please note that Moomoo Cash Plus is an investment product. It is not comparable and is different from savings deposits. Principal is not guaranteed and up to 31 days, 6.8% per annum is guaranteed only during the promotional period. Also, you can get up to 4 stock bundles of the top 5 traded US stocks worth $70 each and 1 Apple stock worth 260 Singapore dollars. And if you sign up with my exclusive link, you can get a bonus 20 Singapore dollars cash coupon. Total rewards value of 900 Singapore dollars. Holding period and buy trade applies. Investment in capital market products involves risk and the risk of losing principal. For more details, please refer to the promotional page in the description below. So don't miss this deal and use my referral link down below or scan the QR code right here to get your Moomoo SG Universal account today. So I talk about the most simple and convenient method, but it may not be the cheapest method because if you're not savvy enough, you would have known of this thing called Ireland domiciled ETFs. And if you want to invest in the S&P 500, you can look at tickers like CSPX or VUAA, which are both accumulating ETFs that tracks the S&P 500 index. But you see, they have a slightly higher expense ratio. So what is really the advantage of these ETFs then? It is because they have a much lower withholding tax of 15% compared to 30% in the US domiciled ETFs, and also the fact that they do not have any estate taxes. Therefore, if you want to invest in the S&P 500 index for a long term, then consider using these Ireland domiciled ETFs like CSPX or VUAA. But not all brokerage and trading platforms offer it. One of them that I use is Interactive Brokers. So you can sign up with my link for Interactive Brokers and then you can start investing in this ETF listed in the London Stock Exchange. So second method to invest in the S&P 500 will be your CPF funding. CPF funding, I think it is a much more different method because not all funds are approved for CPF investing. So I will just share what do I use to invest in the S&P 500, and that is through Endowus, which is one of the digital advisors of Singapore. Specific to Endowus platform, I'm investing in this fund known as the Amundi Prime USA Fund. that is tracking the largest companies of the United States, although it is not exactly the S&P 500 index. But the good thing about Amundi Prime US Fund is that it has a much lower expense ratio, 0.05% per annum, and you look at Endowus pricing, it is 0.30% per annum for the excess management fee. So if you add these two ratios together, that is 0.05% from Amundi plus 0.30 from Endowus, which is a total expense ratio of 0.35% per annum. It is fairly reasonable compared to other solutions where you want to invest in S&P 500. And previously, before Amundi, I was using this Lion Global Infinity US 500 fund to invest in the S&P 500, which is through Endowus as well. But Amundi turns out to be a more cost-competitive option, so I have switched ever since Amundi funds have been activated for CPF investing. And to put it very clear, before you can use CPF to start investing, you need to have a minimum of $20,000 in the ordinary account. So those funds above $20,000, then you can use it to invest. This is the same whether you want to use your CPF for T-bills or other forms of equity investment listed in the Singapore stock market. So it is the same treatment. Minimally 20k, above 20k, then you can use the funds to invest. Now coming to our last funding option, which is SRS, Supplementary Retirement Scheme. What is the best option to invest in S&P 500? So there are two ways that I would suggest. Firstly, it is through Endowus again, but this time it is not Amundi funds. It is the iShares BlackRock US S&P 500 fund. Now, why iShares BlackRock fund over the Amundi fund is because this fund has no US dividend withholding tax, unlike the Amundi Prime USA fund. Even though they have a slightly higher expense ratio, but the lower dividend withholding tax makes up for the loss. So if your portfolio size for SRS is really small, you have a very small AUM, assets under management, then it's good to use Endowus to invest. But let's say if you want to invest for the long term, then all these recurring fees that Endowus is charging you is going to add up, especially if your AUM crosses like $300,000. Then my second way of using SRS to invest will be the S27 ticker that is listed in the Singapore Stock Exchange. Now S27 is the S&P 500 ETF, and the minimum lot size you can buy is 1 unit of share, and it's listed in USD. So assuming now that the price of S27 is around $500 to buy 1 unit, it is around 680 Singapore dollars, and it has a slightly higher expense ratio of 0.09%. But the good thing about using S27 to invest is that if you are buying through Poems, there is no minimum commission at 0.08%. And I know that your SRS funds are in Singapore dollars, but Poems will do the auto conversion in foreign currency from SGD to USD to settle the S27 trade. So S27 is more preferable for people who just want to buy one time, like they don't want to have annual recurring fees charged by the platform, because these investments will be held at the SRS account level and not under Poems custodian, which means no annual management fees and no dividend handling fees from Poems. So yes, these are my 3 ways to invest in S&P 500. To give a quick summary, for cash, if you want the simplest way, just go for VUAA at your favorite online brokerage, or if you want a more cost competitive option, go through IBKR Interactive Brokers to buy CSPX or VUAA. For CPF, you can go through a digital advisor like Endowus to purchase the Amundi Prime US Fund for the most competitive way. And then for SRS, there are 2 ways. One is the iShares BlackRock S&P 500 Fund if you want to do like a recurring DCA. And then for S27, it is more for one-time transaction cost if your portfolio size is really large and you don't want to pay the annual recurring maintenance fee. Now you see, there are different platforms for different funding. So I already listed out the options. You may have your own preference, and that is okay. You don't need to argue which one is better. Just choose which one is best for your situation, and note that this is not financial advice. But if you really want to see my detailed analysis of why I think it's better to invest in the S27 using SRS, then I can refer you to my previous video right here.